Ahoy there, trader. Let's look at how we made a 483.7% return on capital shorting PayPal stock. Let's take a look at the charts. Ahoy there, trader, and welcome back. We're looking at PayPal. It's been a very pleasing stock to trade. And just because it's trending down doesn't mean we can't profit from it. Certainly, I like to sell the rally as much as I like to buy the dip when I'm trend trading. First thing to note is that the average price has crossed over my usual combination of moving averages. It's moved quite hard and fast initially, so it never gave me that initial entry, and we can see we've got more of a time-based retracement at this particular point. This is another way to sell the rally. We don't always need price to put in a deep retracement. As long as we have what I call a time retracement, that's exactly what we see here, and we can just see that I got in a little bit later than the algorithm fired off, but nonetheless we've got a trade entry at around about the same level. Targets on this, we can use eyeball mark 1 if we choose. All I typically do is, at its most basic, is say if that previous move is going to be replicated, then we could see something similar happen down here. That would be what I call eyeball mark 1. It's super simple. You don't have to be making this any more complicated than it needs to be. What does this stock typically move on average, or what are the last 2 or 3 moves? The other thing that we can see here, just a different way of looking at targets, is we've got a range there. Again, I'm just going to count the grids in the background just so you've got it visually. We've got 1, 2, 3, 4, we've got 5 grids. So we've got 1, 2, 3, 4, 5 grids there. So it's almost a little bit beyond what would be called a range target. Height of the range, in this case deducted from the range low, and that gives us an approximate target. And as you'll see, there's a little bit of difference, and the range target was a little bit different compared to the what did it do last time targets. Or you can use a multiple of ATR. Again, you're going to come up with similar targeting. So I think the best advice with all these things is, and one of the questions that I'm frequently asked is, where do I exit a successful trade? And there's no single right answer. I used to teach eyeball mark 1 for quite literally years. Now we can quantify these things so that we can run the algorithm, and again it looks back over the last 20 years. Here's a quick example. So we can look back over multi-decade approach and have a look at what would have PayPal done had I traded the way that I teach all my traders. And what I explain very briefly in these videos is to, in this case, sell the rally in a downtrend, and we can quantify these rules and results so that we can run those backtesting reports very, very quickly, very easily. So a few different ways to work targets. Again, eyeball mark 1. In this case, we can look for patterns or range breakouts. I'm trying to always have a mechanical approach to my trading. So right now I'm using a multiple of ATR. That's what this is giving me. And again, it's about what it did last time. So we can presume it's going to do something similar again this time. Most important part about having a target is to exit at targets. Again, I don't know what's going to happen next. Don't know what's going to happen tomorrow. It may do more. It may put in a quick turnaround in price. I don't know what's going to happen next any more than anyone else. All I know is that on average, this is the optimal exit for my style of swing trading, the one that I teach all of my students, the one that I've been using for the last 30 years. If you'd like to learn a little bit more about that, click the link. If you'd like the 89 stocks which I trade and frequently talk about on these videos, click the same link and you'll be able to get an immediate download or navigate yourself to some further information. With that said, I will see you on the next installment, and happy trading.